It's like deja vu again, or as Americans would say, Groundhog Day. Back to April. US stock markets crashed yesterday after Trump first threatened massive tariffs on China, and then later he imposed 100% additional tariffs on top of those existing levies that they already have in place. Now, this he did in response to China's unexpected move on Thursday of putting export controls on rare earth materials. President Trump theatrically posted on early Friday,
"For every element that they have been able to monopolize, we have two. I never thought it would come to this, but perhaps, as with all things, the time has come."
He went on to say that it could be painful, but in the end would be great for the US. We have to wonder about when that end might actually be. The markets reacted instantly as the US stock market's fear gauge jumped as President Trump sparked a risk-off sentiment with his first post. The VIX, which measures the investor anxiety, jumped on Friday up around 30% in one go. It was trading at almost 21, which is above its 50-day moving average of around 16. The Dow was down 900 points. The tech index, Nasdaq, was down around 3.6%. The S&P was down 2.7%. Even Beijing's actions on Thursday were brushed off. They were seen as another tit-for-tat small moves that were continuing between the world's largest two economies as they remained still in trade talks. Tech stocks kept rallying to record highs into Friday morning US time. Then suddenly, boom. The Magnificent Seven, as the world's biggest US tech companies are called, wiped out over $600 billion, more than the GDP of Sweden or Poland. Oil prices tumbled by 4%. Everything that had been ticking along nicely, those record highs, hopes of reconciliation as both the presidents were going to meet at the upcoming APEC, Asia Pacific Economic Cooperation Summit that was scheduled for October 31st and November the 1st. It's all gone in a matter of hours. And it's a huge spanner in works as the world's two largest economies face that November 10 deadline to reach a comprehensive trade deal. This was the second major sell-off in 2025. Back in April, Trump's first tariff shock wiped off $1.5 trillion from global markets. But this time the reaction so far has been sharper and faster, showing just how fragile investor confidence has become under this unpredictable trade diplomacy that's being implemented by Trump and still supported by his supporters. Then later on Friday, after the stock markets closed, President Trump posted again.
"Starting November 1st, 2025, or sooner depending on any further actions or changes taken by China, the United States of America will impose a tariff of 100% on China, over and above any tariff that they are currently paying. Also on November 1st, we will impose export controls on any and all critical software."
He's also threatened China with export controls on Boeing parts, which he knows they need given just how many existing Boeing jets they currently have. And it was just recently reported in August that Boeing was in discussions with China to sell another 500 jets to the country. Now that deal will probably now be killed by Beijing. Why would it want to extend its risk even more to American jet parts? So what happened? Will Trump follow through on his threats, or will he do a taco? Now, behind the rupture is the issue of rare earth minerals. I've done lots of vlogs on those. Do check out the playlist. On Thursday, China's Ministry of Commerce announced expanded export controls. It issued 6 separate notices outlining a sweeping expansion of its export control regime. This widened its rare earth export curbs, adding 5 new elements as well as key items related to lithium battery production and super hard materials. And it imposed a stricter scrutiny on semiconductor users as well. The world's top processor also restricted dozens of refining technologies and warned that foreign producers using Chinese materials will have to follow its rules. China accounts for about 70% of the global rare earth mining and around 90% of global processing capacity. Now, many US analysts believe that Beijing is being overconfident about its leverage in that relationship over rare earths. And Trump on Friday said in his post,
"China is becoming very hostile and sending letters to countries throughout the world that they want to impose export controls on each and every element of production having to do with rare earths, and virtually anything else they can think of, even if it's not manufactured in China.
In his earlier post on Truth Social Online, Trump said that I was to meet President Xi in 2 weeks at APEC in South Korea, but now there seems to be no reason to do so. Trump also said that besides higher tariffs, many other countermeasures against China are under serious consideration. China hawks are salivating that sanctions may be on the card. John Moolenaar, the chairman of the hawkish House Select Committee on China, said that
China's new restrictive measures on rare earths were an economic declaration of war against the U.S. and a slap in the face to President Trump amid his efforts to fight for a level playing field.
Now, you may remember that in my last vlog on potential Chinese investment in the US, he condemned the idea and he said,
China routinely cheats in its dealings with the U.S. We cannot allow those companies to gain more access to our economy.
Now, interestingly, in response to the Chinese actions on Thursday, Democrats in the House Foreign Affairs Committee blamed Trump for China's tightening of those rare earth exports. One member, Gregory Meeks, who is a ranking member on the committee, said in a social media post, they are in retaliation for Trump's reckless trade war, where he used American export controls as a negotiating leverage. Trump's actions are resulting in expensive consequences for American families. Rare earth minerals, which are used in products such as cell phones and automobiles, have long been a thorn in the side of the US-China relationship. After tensions eased between the two countries over the summer, China said it would allow rare earth exports to the US in a move that went on to ease tensions between the two countries. And it sent US stocks at these higher levels that we saw now. The new Chinese license requirements apply to any product that contains even trace amounts of Chinese rare earths. And even if that product is being sold by a foreign company to a foreign customer, they will also apply to products that contain no Chinese rare earths at all. If they were all made with Chinese mining or smelting or magnet making technologies, they'll fall under those rules. So those rules are going to be very difficult to monitor and enforce. But do they sound familiar to you? Then remember, this is what the United States tried to do earlier this year with regard to US technology, over which there was an uproar from the Chinese, and then the US had to take these back and back down. Now, once the rules are in place, China, of course, can decide how quickly and liberally it will decide to approve licenses and how forcefully it's going to crack down on the rule breakers. In peaceful times when everyone's getting on well, they could grant licenses very quickly, minimizing disruption to the world's supply chains. But if trade relations turn sour, it can also dial up those disruptions by just turning down licenses or slow walking those applications, or even ramping up enforcement. Now, Trump is facing in his second administration a confident China that feels that it has a really big new variable in that relations with the United States, the rare earth export controls. And they're really seen in Beijing as a strong weapon. Many pro-China analysts will argue that if you think it's wise for China to impose export controls on rare earths technology, well, that view should then be mimicking if you think it's wise for the US to impose export controls on chips technology to China. What you can't do is support the United States' own export controls on chips to China as a way of controlling that country's development, and yet expect for China not to do the same for the US. US imports from China are down over 30% this year, but China is still the US's fourth largest source of imports. Now, Trump, it's very clear, was upset by the Chinese actions and seeing them as a betrayal to what he calls his outstretched hand. Trump, before his call, in which the two leaders discussed the TikTok deal a couple of weeks back, in a social media post, called President Xi a gentleman and announced that the two leaders would meet later this month. That last phone call, which was the third between the two leaders, was described by the US president as being very productive. And Beijing also called it as pragmatic, positive, and constructive. However, it's clear that despite this on-off flurry of US-China activity, with attempts to resolve issues through trade talks, under the surface, both countries are pursuing strategies to reduce dependence and insulate themselves from each other, building those buffers between them. Now, frictions between the two sides have continued as the average tariffs on Chinese imports remain around 55%. And despite Chinese requests, Trump's trade team has refused to remove those fentanyl-related levies, and they've kept those talks focused on broader issues like Chinese state subsidies, overcapacity, and export controls. And this has frustrated the Chinese that none of their interests are being discussed during these talks. Remember, they're not Japan or South Korea or even Europe. They're the world's second largest economy. Now, there has been a series of tit-for-tat measures between China and US over the past couple of weeks, despite these trade talks. And this was seen as an attempt by the two parties leveraging themselves vis-a-vis the other. Now, before the Chinese imposed their export controls on rare earths on Thursday, remember, the US had just introduced its blacklist ban of new entities, the so-called 50% rule, which caught many more Chinese companies in its net. I did do a video on this recently as well, so do check that out. I'll put a link to it in the description. The Chinese actions can be seen as that angry response they're giving to that blacklist. In the longer run, the question is, who can unwind their dependency on the other faster? China's investing in domestic semiconductor manufacturing in an effort to free itself of the need for US technology or technology from Taiwan or other American allies. And the United States has ramped up its efforts to boost domestic production, adopt substitute materials, and pursue strategic partnerships with third countries, especially in rare earth minerals. The US government has taken shares and positions in many of these rare earth mineral companies, including MP Materials. And discussions are being held with US rare earth minerals company as well as a Canadian company, Trilogy Metals, and Lynas, an Australian company that operates in Malaysia. However, there is a month between Trump's November the 1st start date for tariffs that he said just now, and December the 1st, which is the date that Beijing has set for new controls on rare earth exports. The staggered deadlines potentially provides for an off-ramp for both sides to de-escalate tensions before these punitive measures are enacted. Trump has suggested as much, saying that he's purposefully set that imposition date for tariffs a few weeks into the future, which gives China room to step back from those rare earth controls. But whether Beijing will is another question. I'm Najma Minhas with GVS Deep Dive. Do share with me your thoughts and comments. Have a great day.